Hello everyone and welcome back to Energy Insights. Today's our discussion on the decline of oil prices. Oil prices are falling today, but the bigger story is actually what's happening around Iran and Strait of Hormuz. Brent crude is trading around $93 a barrel, while US WTI is around $85. At first, that looks like the oil market is finally cooled down, but there is a lot more going on behind these numbers. The United States is preparing new sanctions against Iran. Shipping traffic through the Strait of Hormuz has dropped sharply, and Iran is calling for a diplomatic solution. So let's start with the oil prices and then go through what could happen next. Brent crude is around $92.84 per barrel, down about 1.6%. WTI is around $85.02, down more than 2%. But here is the interesting part. Both benchmarks gained more than 5% last week, and that was their second weekly gain in a row. So a decline is partly about traders taking profit after the recent rally, but investors are also waiting for something much more important, the detail of the new US sanction against Iran. And that's where the market could become much more volatile. US Scott Bessent is expected to announce another round of sanction against Iran. Washington has already warned that these could be extremely tough measures. For oil traders, the main question is simple: how much Iranian oil could actually be removed from the global market? If the new sanctions significantly reduce Iran export, the global supply situation could become tighter. And remember, oil prices have already moved substantially higher. Brent has risen from around $71 in June to roughly $93 today. So the market has already been pricing in the risk of longer lasting disruption. But if the new is stronger than expected, we could see another jump. This is probably the most important part of the story, the key issues of Strait of Hormuz. Hormuz is a major route for energy shipment from the Gulf, but traffic through the strait has now fallen dramatically. According to the latest shipping data, fewer than 20 vessels in the Strait of Hormuz over the weekend. That's a very significant decline, and this matters because producing oil is only one part of the solution. Oil also needs to reach international buyers. If tanker traffic remains restricted, supplies available to the international market can become tighter, even if the oil is still being produced. That's why traders are watching Hormuz almost as closely as sanctions themselves. At the same time, Iran is calling a diplomatic solution. Iranian President Masoud already argued diplomacy, while Iran has strongly criticized the new US sanction plans. So right now we are seeing two very different directions. The US is increasing economic pressure. Iran is asking for diplomacy. And the oil market is waiting to see which direction wins out. If negotiations restart and tension begins to ease, shipping could gradually recover. That could the some pressure out of oil prices. But if tensions continue increase, the opposite could happen. Also, evidence the Iranian flow are being affected. Upper to Iran crude to Chinese buyer have declined, while prices have increased. China is an important market for Iranian oil, so any further reduction in those shipments could create additional pressure on the global market. Think about the chain reaction. Iran exports fewer barrels, still need crude. Other producers then have to supply some of that missing oil. Reason has remained evaluated. Iran has reportedly allowed a number of Iraqi oil tankers to pass through the Strait of Hormuz, following repeated requests from Baghdad. This shows that even with tension running high, there is still some coordination happening around energy shipment. For Iraq, keeping its exports moving is extremely important, but doesn't mean the wider shipping problem has been solved. The real question is whether tanker traffic through Hormuz can return for normal, and that is something we'll have to keep watching. Pakistan Army chief was visiting Tehran for mediation talks ahead of the expected US sanctions announcement. The timing is important. Diplomatic efforts can help reduce tension between Iran and the US. There could eventually be some relief for the energy market, but at the moment, investors don't know how successful these efforts will be. So for oil traders, it's another uncertainty to watch. Now let's talk about where prices could go from here. Morgan has raised its Brent forecast and expect prices will reach around $100 a barrel in the fourth quarter. But that's a forecast, not a certainty. If sanctions tighten, Iranian export fall further and shipping through Hormuz remains restricted, then $100 oil become much easier to imagine. But if diplomacy makes progress and shipping starts returning to normal, some of the geopolitical premium could disappear. So there are four things I would keep an eye on. First, the detail of the new US sanctions. Second, tanker traffic through the Strait of Hormuz. Third, Iranian oil exports, particularly shipments to China. And four, whether diplomatic efforts can reduce tensions. These four developments could determine where oil prices go next. So today's prices doesn't necessarily mean the pressure is over. After two strong weeks, traders are taking some profits and waiting for more information. So the WTI is around $85, Brent is around $93. But the real question is what happens next. If the conditions improve, we could see oil prices move lower. But if sanctions become tight and Hormuz remain restricted, another move toward $100 oil become a real possibility. Well, continue following the situation here on Energy Inside. If you find this update useful, like the video, subscribe to the channel Energy Inside, and turn on the notification for the next energy market update. And tell me in the comment, do you think Brent will reach $100 oil prices straight coming back down? Thanks for watching Energy Insight, and I will see you in the next update. Thank you.